Hey everyone, this is Brad, and I thank y'all for showing up for the last of the 6-part series. I heard Steve mentioning that we have had a good contribution from Janae, and she did say that we could look at some of that, use it for part of the presentation tonight. I had a great meeting with Regina last week. We've had some progress with her, Darcy. It sounds like you're still moving forward, so I appreciate all the effort that y'all are making. And Steve and I were talking about, it makes you feel good to, realize that people are moving forward on their business as part of what you did. I mean, y'all are doing all the heavy lifting, but, we like to know that we're a little bit of a part of it. So with that, I'll turn it over to you, Steve.
Thank you, boss. Good to hear from you, and I appreciate you riding shotgun with us through the series. It makes a lot of difference when the director is on board with us and can actually relate to what our classmates are up to. I'm Steve Carver. I'm talking to you from Dunn, North Carolina. And tonight we're going to talk about several topics. All of them, I think, will bear fruit for you if they can sink in and you can learn something. Plus, due to the hard work of one of our classmates, we're going to be able to use some items that were put together this week as teaching lessons. So we'll get started in the process. Additionally, we'll have some conversation about this being kind of graduation night for those that are prepared for certificates, and we'll talk about those that are made good progress and those that still have time to make some progress. Again, I'm Steve Carver. This is my presentation number 1081, and thank you so much for being a part of my journey and let me join you on your journey into and through entrepreneurship. I'm not a lawyer, not a tax accountant. I'm just a fellow that's been doing it for a long time, 64 years to be exact. Made a lot of mistakes, but I did a lot right because I'm still here. Haven't gotten any trouble yet, haven't ever written a bad check. So apparently we have learned a lot. I'm glad to share my experiences with you. I give you free advice in the best way I can of mutual helpfulness. So the first piece of advice I'm going to give you is always get a second informed opinion, an opinion from someone that knows a little bit or knows a lot about what the subject matter is, and will talk with you confidentially and not have a vested interest in it. So the very best place that you can get good second opinions and feedback on your ideas is from your small business centers at the community colleges, and we're certainly blessed to have Brad sponsoring our program through this whole 6-part series at Bladen Community College. Again, thank you so much, Brad, for you trusting us and paying for the series and making it free for everyone else. And I'm seeing great results on your counseling, and so thank you for all that you're doing. Brad's phone number, if you want to call and make an appointment, is right here, 910-879-5572. Give Brad a call and set up an appointment and see where you can go from there. Study guides have been sent out to you. Hopefully, Brad's been able to get them out to you, and if not, over in chat, in your chat board, let us know if you need them, and I'll be glad to send them to you tomorrow if you give me your email address. And I will be just very happy to do that. So you should have gotten several handouts, and they're different than what you've been getting before. So let's just run down. One, number 1083 is the talking points and outline for tonight's lesson, your 40 drill skills that you've gotten every time. Very important tools for you. Tonight also you've got a nice handout on understanding depreciation. It goes into depth, but still easy to understand. Giving you a list of 25 deductions that I found on the internet, but I think will be very helpful to you to understand and know. If you're working towards earning certificates for this series, there's the requirements are listed there, and your quiz, which is required to earn a certificate as well. An announcement of a new 10-hour course that is crank up on November 1st. That's 5 consecutive Wednesday nights. And we'll go into the advanced skills of applications and training, similar to what I'll show you we're doing later on tonight, which helps you apply the lessons that we've learned in the first part series. But that'll be a whole new course, and you'll be eligible for a certificate of achievement with that. So if you want those handouts and you don't have it, just ask for it over in chat. As y'all are coming on board, and I appreciate you, Mattress, it's good to have you here with us tonight, Elaine. And if you will, sign in over on the chat board with your email address in town, and we'll make sure we get the information to you. The 10-hour course, again, is dives deeper into things we've been talking about these first 6 weeks. Tonight, I want to honor those that have been working with us this fall so far and winding it up this week with the 12-hour course here at Bladen Community College. And we've got, in the total of all 3 schools, 8 folks that are eligible, it looks like, for certificates. More are working towards it. And so glad that certificate will look something like this. It's kind of a draft copy, but they're very pretty. One of our classmates, Sarita, actually designs and creates these certificates for you, and we'll get your name on them and mail them out to you direct. That's why we need your address. But so far, if you're interested, we have 27 people participating, 8 qualifying for achievement certificates so far. 2 so far have qualifying for graduation and a membership in the academy. 1 for the Extra Mile Award, and we'll have 1 for Best in Class, of course. Let's talk about you individually. Jeff Smith's been with us right along the way from White Lake. Liz Sanchez in Clinton with her photography business, and also she's the administrative assistant at Sampson Community College. Cheryl in Elizabethtown has been active with Brad and sent a lot of good information in. We hope she can get her business up and running soon, and we'll still be here for you to work with you. Valerie's business has really exploded this fall. She said she kicked her new advertising campaign in, and it's paying dividends so far. So happy for that. Sarita's overcoming shoulder injuries, but her business is going strong. Tisha stays with us and certainly looking forward to watching her business grow. And Casey really worked hard. She made some big improvements in her Featherby apathy process of making remedies from natural products and selling them down in Wilmington with pop-up supplies, pop-up booths and things like that. So thank you, Casey. And now moving into people who have made new changes in the last couple of weeks. Annette let us know last week that she's decided on what business she's going to move forward with. It's going to be a virtual bookkeeping service for people, and she's decided to name it the Blessed Bookkeeper. So congratulations, Annette. Maybe in the next few months we can help you take the steps to move it past the name and get it up and running. Darcy is with us tonight, a lovely lady, and I'm going to have her on florist one day. I'm looking forward to placing an order with you, Darcy. So thank you for the good work you've done so far, and I know it'll pay off for you. Now we'll talk about those that have already qualified to graduation. In other words, they've done a lot more homework, and therefore they'll be eligible for academy membership. Five folks are pending for that. 2 actually have already done the qualification work. First of all, Sabrine Wallaby and Greensboro. Dr. Sabrine, she's a minister at this point in time. Great YouTube channel ministry. Encourage you to find her, but she's starting a new business that we've been helping her with, educating folks who need special attention, special needs people. So thank you, Dr. Sabrine, for your work. Pamela's really kicked off her P&P Farms operation where she'll be selling homegrown products. Latoya, we talked about last week, just amazing how much work Latoya's done. She's qualified all the way through with all the things, including videos, website working, Facebook, business cards. She just went right down the list of requirements and just getting it all done. So proud of her. And Janae Pope's been kind of laid back like a sleeper, not doing a whole lot of activity until this week. And she showed us it actually, excuse me, she's been working all along. Hopefully she'll be with us tonight. But in other words, we're going to talk about Janae a little later on. Then we'll have a First in Class award winner. And our current winner is Vanessa McIntosh over in Burnsville, who did a fantastic job in the spring session. And this semester's winners are doing an equally impressive job. So we'll be making those awards, and I'll send you notice when we're going to be online talking about everyone that won issues. So let's focus now on the work that Janae has sent to us, and we really appreciate it. And I asked her if I could have permission to use some of her work as a teaching tool, and she agreed. I'm so thankful for that. First of all, she was kind enough to send testimonials in to attention to Brad and I, talking about how much the series has meant to her. That's very valuable for us to be able to use and promote to encourage people to come in the future. So we would appreciate your testimonials on what the series has meant to you. And if you think it's valuable, if you'll send those in, we will appreciate it. We'll be able to use them in promoting our series and our classes in the future. So thank you, Janae. Janae came forward with her cosmetic business, doing a different business card for that, very classy looking card. What I'm noticing here with your arrow, if you see the arrow here, in other words, she took our advice, and I want you to encourage people to text you, use a cell phone number that they can text, because it'll tell you that maybe as much as 20% of my business, and I'm dealing with farmers, people who don't do a lot of texting, but 20% of my business is coming in by text. So let me encourage you that if you're dealing with the general public, and especially younger folks, make sure they know that you can receive and answer texts. So use a phone number that you can, and encourage them to do it. Let me tell you, somebody may not call you up at 10 o'clock at night and ask you about a product or place an order. Maybe they're a shift worker and just got off work, or maybe they've been talking to their wife or their husband for 4 hours, and they finally got an okay. So they probably wouldn't call you if they think you're sleeping, but they'll send you a text message. So that's just another way of marketing, and it's very, very effective. Janae's promoting her wedding planning and event planning business with a really nice business card for that too. So what's the lesson here? For each one of your different businesses, have a different business card. For each one of your businesses, have a different business card. So you can put them out, and more people will be able to find you that way. So very nice looking, professional, elegant card here. So very well done. Notice down here that Janae has added a new mailing address related to her actual business. That's a good thing to do as well. It gives you a little bit more professional look. Put a new website online, a very impressive website that is a one-pager, but it continues. You just keep scrolling down. Excuse me. Very, very nice website. Good images on it. Good bold information. So this is the top header of our website. Notice she's got a little business card up here in the top left-hand corner, and a phone number over here in the top right-hand corner. We'll talk about that a little more. And this is just her startup. So everything here is perfect because it's brand new. And every website is a work of art. It is a living, something that is here to be changed and improved as we go. So my comments are not finding fault. My comments are taking what we've got and seeing how it might be embellished to be more effective and to make some more money for us. So this is just really nice looking opening when you open this. Inside of her web pages, she's got individual profit centers listed. So that, and this is kind of the way I did my website at carverequipment.com. Instead of having just a simple inline menu, each one of her different services, she's got it listed with photo and such as that, and good images on it, including destination weddings. And then she's offering the different types of planning that she will give you, a month of wedding planning, and also a more exclusive full service where she's got hands-on involvement in the wedding process. So at different prices, and actually got the prices listed on there, which is good. It's good to let folks have an idea of where you're going, but we'll get back to that more specifically. She's offering to help with budget planning, actually at the destination, being involved there, and on the wedding day, if you want those services, she can be there to actually be there to coordinate activities, and got it pretty well laid out with good content in there to make it happen. So what she spent a little bit of time on that I'll talk about is corporate events. So her thrust right now, when you look at that website, is mainly weddings, but she did pull in corporate events and have a little bit to talk about on that with information. I personally think, and it is of my opinion, that if Janae wants to do more than weddings, I really think that she would have more business from the corporate side, given her location and opportunities in Bladen County to do more corporate events than she does wedding events. Probably wouldn't make as much money, but might have a more steady income and to augment the weddings. So let's get into some teaching right now, and we'll take a few seconds to do that. I want you to know, when you have a big ticket item, $2,700, $5,500, $6,500, like someone paying for a wedding, when you have a big ticket item, I'm going to tell you right now, you don't have a lot of competition. There's more money there, there's going to be more people after it. And by golly, I want you to be after the big ticket items, but I want you to go in here kind of smart with the benefit of maybe the old timers experience telling you that the competition is coming, so let's go ahead and plan to be smart, to be intuitive, to be aggressive, but also to be really coy in the way that you are putting your information out there. So that's the first lesson. Once you move into items that are over, I'll say $600, just to have some place to start, I don't consider that a big ticket item. And once you move into that range, you're going to need to look differently at some of the things that you do. And the message here is, if you're in the big ticket items, they are going to require advanced forecasted negotiations. Now, last week we talked about negotiations. Tonight I'm going to show you exactly places where you need to do it, and this is a prime example. Big ticket items will require more forecasting when you're doing your pricing structure. I don't suggest, number one, that Janae might consider, instead of just saying $2,700 and $5,500, remember that is like take it or leave it. Everything there says take it or leave it. She's got a long menu of all the services that's involved, but it's, you get all this for this price, or you get all this for this price. I put that in the take it or leave it category, and would much rather her have the leading here, and we'll call it the hook. Remember the look and the hook? The look is great, but the hook, I think we're missing a little something here. So I would suggest to someone in this situation, and Darcy, as you're offering flower programs or floral programs for people's weddings or receptions or whatever they're doing, or regular things, that give some room for negotiation. So I would say, let's start I'd say prices starting at, and I'm okay with the list a month of and the full ceremony and reception, but instead of saying $2,700 in our pricing classes in week 3, remember the $99, just less than $100. That is good pricing strategy, and it really makes a difference. So I would say, instead of $2,700, I'd say $2,695. $2,695, because that is less than $2,700, and you don't know, the people looking at this might have a budget for $3,000, and they've got someone that's offered $2,900. They got someone that's offered $2,700, but here's a $2,695. Let me tell you, some people, that $5 will make a difference for them. At least get them to take a closer look at what you're doing. Some people say, "That looks cheesy. That's cheap type stuff. That's gimmick, Steve." You're darn right it is, but it's marketing gimmicks at work. So over on the $5,500 side, I put $5,495. And the key thing is to say prices starting at. starting out. That takes it away from being take it or leave it. It gives the impression that we can work things out. I also didn't know here, and I needed to mention to Janae that if she don't know, she needs to, whether or not this type of service is taxable. And if it is, then you're going to need to have a little thing there that says plus tax, or somewhere in fine print, at least letting people know, or a portion of these services may be taxable depending on what you get. So that's an issue that hadn't been addressed here. Next, instead of listing them all these items for $5,500, might give some consideration to setting up a form at your website where people can check different boxes for the different services they want. I wouldn't put a price beside everything. But I let people know, check the box that you want or require, and I will come back to you with an amended or a revised quotation depending on what you actually want. Now this is getting altogether away from take it or leave it and giving people the right to get in here and let's talk about what I want, what I want to pay for. Kind of that like that Liberty Insurance commercial that they play 25 times an hour, it seems like, pay for what you get. And indeed, that is something here that you might want to consider in having a menu like this. These people are working with tight budgets. It's not like you're working with one farmer with one checkbook. These are probably people, men and women, young ladies shopping, and their dads or their moms have given them a budget to work with. So any way that you can corral them in to working through your budget is going to be important. Now, I noticed earlier now that Janae told people she would help them with their budget. Helping them with their budget means I will do more than say take it or leave it. Okay? Just something to think about. And it's a long range between $2,700 and $5,500. And someone might want a lot of services, but they don't have $5,500 worth. I'd like for them to know that we can start at $2,700 and work our way up. So next thing it is I want you to consider is suggesting a planner options. Make sure they know that whatever that they're doing is no refunds and all payments are non-refundable. That needs to be in there clear. You don't want to run anyone off in it, but in the final analysis on those web pages that people are probably not read more of the fine print, those words need to be in there. In your business, you don't want to be giving refunds. When the money comes to you, you're going to spend it. You're going to be spending it on them with time and energy. So you also might want to have probably what the deposit will be. And I suggest that you set a minimum of maybe $500 deposit. So if someone wants to do business, let's get an agreement in place. They pay you some money, it's non-refundable. That'll keep them from shopping around even after do it, and people will do that. Anyone that's ever been in the real estate business knows that people will say one thing to you tomorrow, and tomorrow you can't find them. So get your deposit, make sure they know it's non-refundable, and it's not a bad idea. Also, that you might consider offering a monthly installment plan so people can start paying you right away, and or have a midpoint deposit for another pretty good chunk of change because you're going to be spending more and more time on it, and then decide on how close to the wedding or the event do you need to be paid in full so that you make sure you've got your money in time to make cancellations without you being in trouble with the suppliers that you've lined up to do business. I had never planned a wedding with a wedding planner, so I'm operating totally out of just what seems to be the case. Don't pretend to know it all, but these ideas certainly will apply in almost all other businesses. If they apply in the wedding and event planning business, that's up to you to find out and do your searching with your competitors. I would say that it's clear there's no problem at all, and maybe a good idea to put in here somewhere that discounts may be available, upfront pay it all discount may be quite available to you, because look, if you're adding up everything that they're doing that they want to have and it's $5,900 and you're offering a 12% discount to get it down to $5,200, why would you do that? because indeed this person may have had a $5,500 budget and have already got the money. And indeed, if you can offer a way to get a cash discount down to that budget, then the better off that you are. Also, by knowing up front, if you can, have the people tell you what their maximum budget is. And you keep that in the back of your mind so that as you're adding up the plan, indeed, you know at the end of this, you're going to hold out a secret weapon. You're going to hold out a secret weapon to help close this deal when you're going to say to them, well, these services are adding up to $5,900. But if you want to go ahead and do the deal now and pay now, I'll discount it down to your budget of $50. You got a budget of $5,500. We'll make it $54.99 if you're ready to do business right now. Now that is a closing statement. And if someone really likes you at this point after working through all these details and they've already got the money, why not? Well, why do you want to do it? To take them out of the market, to get your money in your bank account, and then you do what you're supposed to do. Not only will that get you a raving fan customer because you got the job done at the budget, but if you perform, give them 100% satisfaction, they will tell the rest of the world that you're the person to do business with, and that's where that 12% may be the best money you ever discounted. Okay? Another point here that we'll talk about a little bit more tonight is that you never tell it all. And Janae, if I would have one thing to say here, you have spent hours and hours and hours of work in putting this menu together, but I suggest that maybe you're telling too much. You always want to group your conversations or your text or your context to keep your competition from being able to pick you clean. Make your statements more general, 100% satisfaction, because that's what they're after. At the end of the day, it's a perfect memory and very pleased with the service that you gave. It's good for you to have these things as frequently asked questions, but you don't want to put everything out on the website because your competition on a big ticket item will pick it apart and match it, their copy right off of your website and make it a part of their plan. Because people are naive, and young folks, especially young brides, might say, well, I'm talking to you, Janae, but I'm also talking with Sarah over there or another wedding planner over here, just trying to see where my best deal is. Well, you listen to that, and because I want you to write those people down, who the other people are talking to, and you go to their websites and you study their websites and you pick it apart so that you are the best prepared person in the room. And on a big ticket item, you need to do that because let me tell you, other people are doing it to you, and this may be offering too much. Okay, just something to think about. All right, well, thank you, Janae, for giving an opportunity to suggest different parts on your website. I hope it was helpful for others. I want you to keep those drill skills. Look at each one of them, write down how each one of them would affect you on them as you go through them so that it will help you. Tonight, our specific lessons are more about taxes and record keeping, depreciation, deductions, and some secrets to help you do some selling. Okay, so let's get on to it. Part one, record keeping. It's important to every small business person to have a system to keep up with your records that is manageable. There's several ways that we can do that, and you can do it on a flash drive for computer files. You can do it in computer cabinets over here, like I have, or in boxes, banker boxes where you're keeping your paper in. Lots of different ways to keep your files, and you need to keep them. So as you're starting your business, let me tell you right now, you might as well go buy one or two stand-up 4-drawer filing cabinets. Just know that you're going to need them to get started, whether you're keeping paper files in them or not, or other paraphernalia that you're creating business. You need a place, a safe place that's dry and safe and hopefully won't catch on fire. But we have we don't build up a mountain of different paperwork type records that we're going to need to keep. and some will need to be kept for a long time. There are a lot of ways to do this. I want to suggest to you that if you have a backup system on your computer, that you use it. There's certain contractors that will do that for you, certain devices you can add to your computer. The cloud system offers backup opportunities for you. What I use is I keep an extra flash drive plugged in all the time, and for my more important files, I'll actually put them on the flash drive and then take the flash drive out at night or at least on weekends. I save files in a couple of places on my desktop. I ask my bookkeeper and accountants to make sure they back up our more important records that we'll talk about a little bit later on. So I have several folks that are helping me keep up with important files. Plus, here at my home office, I've got a safe room with lots and lots of items in it. So just plan that you're going to have a lot of records. Some records you're going to keep forever. And it's the law that you keep them forever, that you will need them forever. And those are listed on the slide here. I hope you are able to see those. Your different accountant records that come to you, any copyrights or patents, of course, titles and deeds, you want to keep all that. That's just common sense. But it's good to keep them in one place where that you're able to find them when you do need them, but secure so no one else is going to be rumbling through them like my grandchildren might want to do. So there's a lot to think about in where and how you're going to keep those records permanently. And then there's some other items, of course, that you always want to think about, but your tax returns are kind of critical that you're going to need to hang on to those for forever. Other items you don't need to keep but 7 years. That's the law. The Steve's law is 8 years, but I didn't put that on here. I suggest you keep items 8 years because at the end of every year, after you've boxed up your taxes and you think you've got them all neat in a box and all sealed up, another document will float in, or you find something you forgot and such, and you're not going to go untape and unbox that big old box. We're going to put it right into this year's record. So lots of times there's one or two pieces that's left over that go into the next year. So that's why I keep them 8 years. But what do you want to keep for 7 years? Bank statements, cash records, employee termination records, and such as that. Two things I want to focus on. Bills of lading. Bills of lading. Now, what is that? If you had ever been involved in shipping out stuff to customers, you probably won't know. But a bill of lading is an official shipping document. It is a shipping document that proves who shipped it, who got it, by what means did it get there. Why is that more important now than maybe not before to you? Well, there's still a lot of items that if you ship out of state, you don't have to charge tax for. And if you don't have to charge tax for it, that means if you ever have an audit and they come around and they see an invoice that you didn't charge tax on, North Carolina wants to know, why didn't you pay us tax on this item? And you're going to say, well, I didn't have to because I shipped it out of state. The state auditor will say, okay, prove it. And the way you prove it is to come up with a bill of lading. So if your business is involved in shipping items out of state, then you want to make sure that you're saving those bills of lading or shipping records, either from UPS or US Mail or ever how you're sending it, and staple it right to that invoice. So if it comes up, you won't have to have a tax liability. Another item that's important that's not the law, but it's kind of Steve-O's law, employee records. You want to keep employee records at least 7 years after termination. Why is that? Because if an employee, 5 years after they have left your employee, have an accident or end up going to the hospital, the first form that people are handed at the hospital is just work-related. And a lot of people will say, well, I think it is because about 5 years ago when I was working with Steve, that's when I first hurt my back. So they check yes. Well, who was your employer when it happened? Well, Steve Carver was. So I hadn't seen this person for over 5 years, and when they left, they had never had any back problems that I knew of, and they signed a document on the termination paper, when I gave them, when we split records, it said, I'm okay, I hadn't been hurt, I hadn't been injured, and that document is in that file. Well, when the workman's compensation people come to make me pay their hospital bill, I don't say, I've got proof right here. I don't know it. And you probably, if you have a document, will not be charged for it. Yeah, maybe you didn't know that. Workman's comp claims can go back as far as an employee's history goes. So maybe someone isn't working for you now, but worked for you before, and they say that they got hurt while they were working for you. You got to ante up. That's the way it is. That money, hopefully, it was taken out of your taxes as you paid them each week and each month, and you got an workman's compensation account in your company name, and that's where that money would come out of. That's right. I found that out the hard way when I sold my business back in 2008. I knew I had $31,000 in my workman's comp claim. That's money that we had paid in that nobody had used. So I promptly called up the workman's comp people and said, please send me my check for $31,000. I mean, I thought that was it. That was a boat, as a matter of fact, that hadn't floated yet. And the truth of the matter is that boat didn't ever float, because the lady told me, Mr. Carver, we do appreciate your contribution of $31,000 on behalf of the employees that were working for you. And that was your money. I know that. They didn't pay a penny of that. But here's the way it is. That money's going to stay up here with us. So if any of those great employees you had all those years ever need it, it'll be here for them. Ha! Well, why not a kick in the butt? But at any rate, that's the way it is. So just know that when you're paying in those workman's comp monthly payments for each one of your employees, you're not going to see that money ever again. So good luck with that. The rest of the story is, if you'd have had a lot of claims and all that money gets used up, then they raise the amount that you pay each week, so you fill that account back up. A little bit of interesting information. Got some more people joining us. So Valerie, good to have you on board. I hope you've had a good week. I'm glad to have you on with us tonight. More 7-year things you have to keep: your invoices, tax returns, payroll records, and canceled checks, things like that. The law says you got to keep them 7 years. I suggest you keep them 8 years. I would go ahead to say to you, though, that I do suggest that after 8 years, you do get rid of them. The stuff that you don't have to keep, get it on out. But be careful. Don't throw a box of records out just because it's 7 or 8 years old without opening it up and seeing if you have put some items in there that are permanent record type things that you need to keep. Always double check. And if something's in there that you need to keep permanently, move that to another box and hold on to it, but move on out with the other stuff. I do suggest that you do that, and here's the reason why. If for whatever reason someone decides that you've been doing some things that you shouldn't be doing, and they come and they investigate you for legal issues, they can't go back but so far, except as far as records you got. So some issues they can keep searching as long as there's a trail to follow for records. So if you don't want to be held accountable 100% for items such as that, one way to protect yourself a little bit is to clean your records out legally as soon as you can. Now, we live in an area, how well we know, where we have hurricanes and floods and tornadoes. Of course, fires can always happen too. But mainly in a disaster area where FEMA might offer low interest loans or grants to small businesses, it's always small businesses that's been in business for usually more than 2 years. And they cover things like lost revenues or help you build your business back, depending on this or that. But when you go to them to apply for some help based on the lost revenues that you've had or lost profits that you will suffer, they're going to want to see your financial statements to see what you've been doing on average every year or two for the last 3 years. And then they will look at that and say, well, yeah, it looks like your normal revenue is this, and we can maybe compensate you for a certain amount based on what you have been doing. So this is the two-edged sword of kind of cooking your books to show that you didn't make any profit so you don't have to pay much taxes, or showing some profit on your tax returns, and knowing that you will have to pay taxes if you do. You also show that you're making some money so you'll be able to make a loan or impress a vendor, or just the fact that you've got a very profitable business and you want to show it. But if you're not showing you're not making any money, then FEMA's not going to pay you any money because you haven't been making any anyway. Bottom line. Fixing your books to show the least amount of profit so you're paying no taxes is a two-edged sword in the case of this. It's a two-edged sword if you want to borrow money. It's a two-edged sword if you want to impress a supplier or a vendor or an investor to help you with your business. So keep it smart. New businesses need to show profits. When business has been around for 50 or 60 years and folks know that they're sustainable, it's not quite as important as it is for a new business. Part two, let's talk about depreciation. We all know about appreciation because I appreciate y'all, but depreciation is another book. Understanding depreciation and how it affects you as an entrepreneur is a real deal. Depreciation has had a major impact, positive impact on my business forever. So I want you to understand it, so how it may help you as well. It is kind of a deep subject. There's a lot to it, and certainly not one that I can take up in 10 minutes and give you any understanding. However, if you watch closely what I don't have to say later, and you'll take your handout, Understanding Depreciation, you will be able to get a real good handle on it. So Lisa Borga, who I found on the internet, has written lots of information about business. And she did an article on Understanding Depreciation, which is fabulous. So I copied it, gave you the link, give her credit for everything, and glad to share it with you. It's in your handout. So please read through that. I'll give you a little gist of it right now. What is depreciation? Well, it is a reduction, that's the big word, reduction in the value of an asset. And our assets reduce in value with the passage of time and with wear and tear, right? You buy a new truck today, you drive it, you got some time on it, you got some mileage on it, the tires are getting worn out, the engine's got some wear on it. So the truck is not worth as much money as the day you purchased it. It's depreciated. And that is true with every asset that we buy in a business. Hard assets, iron, things you can touch, things with value, things that last over a year. Those assets, we can keep up with them, and we are interested in their value on our books. So your machinery and equipment and things like that are assets, and when we'll try to spread the cost of that asset out over a period of time, instead of plugging it all into 1 year and writing it off, which might wipe away all of our profits. However, if we can take a little bit along each year, we'll show more profit, we'll show more value on our books. Plus, it's just generally a good thing to do, especially as lenders and bankers look over your financial statement. So let's use for an example to get into this. How would depreciation affect you? Let's say you're starting out today with $10,000 cash. You put it in the bank after you get your FIE number into your commercial account. So you got $10,000 in there today, and therefore your business is worth net value $10,000. Easy enough, right? All right. Next step. You're going to be in the woodworking business, and you need to buy an industrial saw. And that saw will cost you $5,000. So the very first check you write out of your banking account is for $5,000, and you go buy that saw. Now the question is, since you used half of your money, does that mean that the value of your company, the net worth of your company, went down in half? half the money's gone, right? No, it does not mean that, because you still got that saw, and the day you bought it, being brand new, it was worth $5,000, and your company value stayed $5,000 for the saw, $5,000 left in cash. You still got a $10,000 company. Good deal, no problem so far. Now, if you would just write that $5,000 off of your profits at the end of your first year, maybe you didn't make $5,000. By doing that, that might cause you to go into a loss, and you don't want to show you a loss your first year if you can help it. But with a 5-year write-off plan, and write-off means, and we'll get into that, taking a certain amount of depreciation each year off of your taxable exposure. And if we've got a 5-year plan and you have options for 1, 5, 10-year, different years, the Congress authorizes different depreciation periods. But generally, there's a 5-year plan that you can choose, and we'll use that for an example because it's easy to use with $5,000. The first year, you're going to take a $1,000 write-off of your plan. For the second year, another $1,000. So the second year, on your book value of that saw, the book value of that saw goes to $4,000. Therefore, your company net worth went down $1,000. Third year, $3,000, $2,000. Fifth year, $1,000. And the sixth year, that saw is still at the company, but it's valued $0. And your company, that book value went down $5,000 over a 5-year period because of depreciation. You were depreciating an asset. And an asset is a tangible item, not a website, not a songwrite, okay, but a tangible item. So what did that do to your tax exposure, though? That was the negative side I just talked about. But when you wrote that $1,000 off, each year $1,000, that meant you reduced your tax exposure by $1,000. I didn't say you reduced the amount of taxes you paid. I said you reduced your tax exposure. That is, if your company had made $50,000 and you had this $1,000 write-off to apply, that would show that your profits were reduced, your taxable income reduced to $49,000. Hence, you would pay less tax on it. So as that item is depreciating in value, and your company value is going down a little bit every time it goes down, the good news is you're paying less taxes because it's doing that, and you've got more money left to spend. More depreciation means you've got more money left to spend after taxes. That's why we're doing this. So it might be said that I'm going to buy more stuff so I can pay less taxes. Some people really think that's the end of the story. That's all you need to know. But that is really a catch-22, don't do it situation unless you have professional tax advisor advice that, yes, this is a good thing to do. You're making a lot of money this year. Therefore, I suggest that you buy some tangible assets that you need that will make money for you, and it will help reduce your tax exposure. Notice the key things that Steve-O said here. Yes, buy the items. Go into debt a little bit, provided these items that you're buying will make money for you or will be solid assets that will not depreciate in a hurry. And some of them even may appreciate to be worth more money. So keep that in mind. Yes, you can buy more items if you're in a really profitable year, and depreciation will help you pay less taxes, but be careful there, okay? Now let's talk about different kinds of expenses that you might have in your business. There's two basic kinds. Those are general business expenses, and they're capital expenses. Wonder what the difference is in the two. Well, you want to know as a business person, you want to know the different types of expenses. The business expenses are items that you buy for throwaway or use up items. Ink, paper, insurance, salaries, things that you, after you bought them, you don't have anything to show for them. No tangible asset at all. But capital expenses, that means you're buying assets, things that you're going to keep, and they will hold value for you and for your company. And the capital expenses are those that are depreciated. You can always find a company's assets listed on their depreciation sheet, in their financial statement, their depreciation sheet, because that's where your assets are listed. That's where you take your depreciation from. So that's the place you would look to find out the assets of the company. And the total of those assets less the total of the debts would end up being the book value of a company. Right now, we'll say, and we'll say it later again, do not confuse book value of a company with fair market value of a company. A company might have a book value of $300,000, but a fair market value of $16 million, or vice versa. So we need to get in and make sure we understand the difference and we don't get them mixed up. A couple more people have come on. Janae, welcome. Glad to have you on with us. We've been talking about you earlier and looked at your work, which we really do appreciate. Part 3, we're going to talk about the taxes. The first thing accountants always encourage me to say to new entrepreneurs when I have this opportunity like tonight, what do the accountants really want you to hang on to and remember? What gets new entrepreneurs in trouble more than anything else? And that is getting a surprise tax bill and you don't have the money to pay it. And it happens. It happens often with new business folks. So the key to avoid that very bad situation is that as you're doing business and taking in deposits, and I don't tell you that your business may be on fire and really just raking in the money, and that is a good feeling, and I hope you have it. But if part of that money you're coming in is your customers paying taxes, sales taxes, for example, or you're paying out a lot of money to employees for the great work that they've done that's created all this income to come into you, that money that you were paying out to employees, you were also supposed to be setting aside some tax money for those different types of withholding taxes. So the word is, from day one that you're in business, when you take in money or you pay any type of employee payments where withholding taxes are involved, set aside the tax money then. Don't just say, well, I'm sure at the end of the month I'll have plenty to pay these bills, because it don't happen that way. Risk management will teach you always pigeonhole tax money, because when you don't pay taxes, it's not fun. When you don't pay taxes, you have to pay penalties, you have to pay interest, and if you can't pay it right now, you have to shut down. And they start selling your stuff to get that tax money. They don't have any sense of humor at the tax place. So just keep that in mind. And the way you avoid getting it cross with them is to pigeonhole tax money so when the taxes are due, you've got them ready to pay. Now let's talk about those business expenses again. Business expenses are things that you spend for running your business, paying employees, travel, those kind of things that you don't end up with an asset to hold in your hand. It's conducted the trade. And that's just called full or general write-offs. Write-off, general business expenses. Capital expenses, on the other hand, are when you're buying something that's going to be around a while and you want to hold on to that asset and keep up with its value for several reasons. You want to keep up with the value of your asset, number one, so it improves your company's book value. Number two, it shows you have more net worth, which is that book value. And you're able to account for the different things, but mainly so you can take depreciation advantage of it and pay less taxes because you do have those assets that you're depreciating as you go. So let's talk about in your business, what would be a general expense versus a deductible capital type expense. So a new printer that you buy for $250. Well, that's a fairly inexpensive printer. I've got one right here that has lasted me for 6 years. I'm expecting to get at least 4 more out of it. So in my business, my little business, I would capitalize that printer and call it an asset and put it on my books. A big company, though, like a big insurance company that has auditors all over traveling around and adjusters, 2,000 of those printers out in the field riding around with different auditors and adjusters, they wouldn't consider that a depreciable item. They don't want to keep up with that many printers on their books. So they would write it off. They would consider that a general business expense and write it off. Now, if we bought a $2,500 printer, there's probably no doubt commercial printer or $5,000 printer, that would definitely be considered an asset, and I would put it on my books. I used to have one, and I did have it on my books. Even a bigger company probably would too. When you put something on your books like that, you have to keep up with the model number, the serial number, and what you paid for it, and the date that you bought it, okay? But it stays with you so you can depreciate it through the years as a tax advantage. Now, how about the box of paper that you bought with either one of those, 250 bucks? No, that's not going to be a depreciable item. It's not an asset. You don't use that paper up as you go buy some more. So that would be a general write-off type expense. A $2,000 set of tires in my business would last me 5 or 6 years. And I would depreciate a set of tires on one of my big heavy hauling trucks. But a trucking company goes through those kind of tires, 2,000 sets a year. That would be a big write-off for them. They'd take it right off the top, general operating expense. $17,000 engine, for me, yeah. For a big trucking company, probably not. How about renting a rental truck? Rent is never a capital item. It's always a write-off. So the lesson here is, no two businesses will handle everything alike, and you've got the freedom. You've got the freedom to call it capital or business expense as you put it into your system. And that is a really important freedom that will help you. It helps me a lot because I've got a fairly small company with not a lot of assets. So when I can add this or that there, it certainly improves the looks of my financial statement because I don't have many fixed assets now. The greatest asset I have right now is my website, and I can't depreciate a website, even though it's probably worth many, many thousands of dollars. But some items you can't do. So I hang on to more little items I'm keep on my depreciation sheet just so I can look viable to a lender or a creditor. So every business will be a little different. You got that freedom. All right, how about a weekly payroll? General expense. Nothing tangible there. It's got to go. Now, when that cash was in the bank, it was a cash asset. But once it was spent as a payroll item, it's gone. It's just an expense item. Fees like insurance and CPAs or any other types of consultants, write-offs. New set of shop tools, $4,000. That's an asset, and we'd hold on to it. Now, for small businesses like ours, we might never buy a new set of tools for $4,000, but as we're getting started, as Darcy may be getting started with a florist shop, indeed she might buy $100 worth of tools this month and $500 worth of tools next month and continue while she's building up the things she needs in a new business. In the first year, she may spend $4,000 for tools. Well, it's perfectly fine for you to take all those little invoices, but you got to keep up with them, get those invoices, add them up, staple them together, and then you can call that a new set of tools that you bought that year, put the dollar value on it, and plug it into your depreciated items as a set of tools. Now, anything that's on your depreciation sheet, if the county auditor comes around to verify everything, you want to make sure that if it's on that depreciation sheet, you can put your finger on it and show it to somebody. That's the obligation you've got. You can't just stick stuff on there for the fun of it and try to call it a purchase so you can get a tax advantage. That is tax fraud. We don't want to do that. So remember that forklift? We paid $1,000 a month rent for it. We had to write that off, right? That's exactly right. But we'll come back to that in a minute. How about the delivery cost? No, they're all delivery, non-tangible, it's a write-off. But after renting that forklift for 24 months for $1,000, you got $24,000 in that sucker. But you paid rent on it. Every bit of that was a write-off. You took the write-off as you paid it off. Now, as you were taking those write-offs, you were reducing your taxable income, so you save money by doing that. That is a great example of tax avoidance. You were using that rental to reduce your tax liabilities, so that was just fine. Getting the use of a new forklift, paying rent on it, reducing your tax liability. Of course, you were taking that cash flow was going out in a hurry too. But now after 24 months, you've got the option to buy it with a lease purchase plan, and you can buy it now for $5,000. The forklift is worth at least $24,000, and you can buy it now for $5,000. So you say, yeah, okay, I'm gonna stop renting and buy it. But when you buy it, that becomes a $5,000 asset on your books, but it's really a $24,000 or $25,000 assets fair market value. So that's a perfect example of how fair market value and book value aren't even kin to each other, even though they sound similar in names. And we have to be careful that when we're buying or selling a business based on book values, based on what's actually there, okay? So about doing some taxes now. What do you think about that? First thing you want to do is to, when you can, find an experienced bookkeeper that has education and experience in doing the books like you have. And that's important because you don't have experience. So you want to find someone that's got some in the bag. I recently, at the beginning of this series, I bragged about having a bookkeeper that had been for me for over 50 years, and that's true. But during the course of this fall, she's had to retire, became ill. And for the first time in my business life, I had to go out and hire a bookkeeper, and I did that during the course of this, and I learned a lot. Mainly, bookkeepers can be very, very expensive, and they can be very, very inexpensive, even for some real good ones. It's important that you shop. Make sure you find someone that you're comfortable with first and that you can talk to and communicate. I had to talk with about 6 different people. I found one I'm very satisfied with, I think, because I've only been working with them now for 2 months. We'll find out. You also want to, if you can, have an experienced CPA, and a CPA that is not in cahoots with the bookkeeper. So good to have one or the other. It's good for the CPA to look over the bookkeeper's shoulders. I'll mention to you that's in your handout a statement that's in the IRS Internal Revenue website talking about things you might want to consider when you're hiring a bookkeeper and a CPA. So you might want to go to that link. So what's the difference in these two words? Tax avoidance versus tax evasion. What's the difference in the two? I want you to know the difference, and I'm probably the only person on the speaking circuit that does these types of webinars that will approach this subject, but it's important, I know, for you to know. Tax avoidance is totally legal, and tax avoidance is something that you do want to know and do. Things like renting, rent to own, when you pay deposits, how much interest you pay. There are a lot of ways that you can avoid paying more taxes, legal ways. And we that are new in business and small in business need to take advantage of all those things that we can legally. Now, that's important for you. But tax evasion means illegal. That means you're stealing and cheating and lying in such a way that you're not doing this in avoiding taxes. You're actually evading them in the most worst ways that you can that make them illegal. And that's a bad no-no thing to do. And if you have a question about how you need to handle a situation one way or the other, I suggest you call a CPA and talk to them about it. Because being found guilty of tax evasion can have some serious repercussions in that they can fine you, add big penalties, put you in jail, take your assets. So keep that in mind, keep it clean, keep up with what you're doing. And I'll talk to you about how to help with some of these things. What are the hot buttons with business deductions? What is a deduction? A deduction is, like we've just been talking about, depreciation is a type of deduction. And these business expenses that we call these write-offs, they're all deductions, and we're going to talk about some that you might not know whether or not you can use it as a deduction. So here we go. Home office deduction is one I get asked the most about. How much of a deduction can I take if my office is at home? Well, the rule of thumb is if your office takes up a certain percentage of the floor space in your residence, that percentage of the floor space is exactly the percentage of household expenses that you can deduct and claim it as a business expense. Example, you've got 1,000 square foot apartment and your office takes up 100 square feet. That means that's 10%. So 10% of your apartment rent, utilities, maintenance, on and on and on. 10% of those expenses, when you add them up, you can take 10%, put it over, deduct it as a business expense. There you go. Got to be careful here though, because you might say, well, my office is half of my apartment. It's the whole open space in the front of it, 500 feet. Well, if you're going to claim 50%, I'm going to tell you that an auditor will probably want to talk to you about that, because they're going to ask you, what else do you do in that space, and this and this and that. So don't go hog wild with your percentages, because you'll get challenged if audited. A good way, if you can, and you have the space to do it, is to have an outside office. I'm fortunate enough to have an outside building that I call my office. And when you have an outside building that belongs to you, you as an individual can rent. You can rent your office to your company. So for lots and lots of years, I've been renting my office that I'm sitting in right now to me as the individual for $625 a month. And every month my company pays me $625. That's a 100% write-off for my company, and it's taxable income to me. But it is more cash flow for me. Now, that cash coming in is taxable, no doubt about it, okay? But what it does is it allows me to pay for like yard expenses, and you got a lot of blue sky area that you can apply expenses to your office building, and adding in there that maybe before you were just paying out of your pocket as an individual. Gives you some flexibility. Travel and meals that are directly business related that you can prove and document, they're deductible, and we'll talk about that a little bit more. Used to have a lot of customer entertainment that you could write off, and people would take their customers fishing on charter boats and do this and that. Those laws have really tightened up. So if that's a part of what you're going to be doing, you need to talk to your accountant and see what's legal and what's not, because they will check that regularly. Rent, taxes, insurance, business-related stuff, clothes and uniforms. Let me mention that. If you own a shop, a tractor shop or an automobile shop or a paint company, and you're buying or renting uniforms on a regular basis, you would just charge every bit of that off as uniform expense. But I will mention to you that maybe that's not what you're doing now, just like it's not what I'm doing. But I do have to buy clothes to sit in front of these cameras or go make presentations. And so and just to do my work, I don't have a uniform that looks like someone in the Army or at the automobile shop would wear. But I got clothes involved, and I'm indeed encouraging you to consider, if you need the deduction, is every year go buy some what I call work clothes. Go ahead and buy $200 or $300 worth, so that you've got one ticket that you can show that you bought sport coats or shirts or whatever it is that you're buying, and call that uniform expenses. Plug it in, and I think you get you a good deduction there. You can't go hog wild with this, but being reasonable can get you a good reasonable deduction. Insurance is kind of a place that I need to give you a tip or two. Insurance for the company, of course, for your office building or business insurance that you're going to be buying, of course, that's a write-off. But how about life insurance for you, or disability insurance that you might want to pay with a company check? As long as the company is the main beneficiary of an insurance policy, that is 50%, 51% or more, generally, unless they've changed the rules recently, that can be 100% write-off for you, even if you are 49% or less the beneficiary. Now, that could be really important if you're starting a young family, or you just need to have some personal life insurance, that as long as the company is the beneficiary, and if you own the company, it's the same thing for you, right? Or that's 100%, or if you have the company being 51% beneficiary and you or your estate 49%, unless the laws have changed, the companies can still pay the entire bill, and you get the benefit of the extra insurance. That's really important as well, because at that point in time, the company would own a whole life insurance policy. And whole life insurance policies create value, cash value, right? As you pay premiums, the value of the policy goes up. And you do that over a long period of years, there can certainly be a very large cash value there. But you, as owner of the company, can indeed let you as an individual take over the ownership of that life insurance policy and finish it on. And if there's cash value there, that might be a way that you can create some wealth that the company actually had invested in before. It's not going to depreciate the company's value because it's an intangible asset, but it could indeed have very important meaning for you. It's a touchy, thin ice subject. It works for a lot of people. 20 years ago, as my children were going to college, it really worked for me. So if that's something that maybe applies in you, I want you to talk with a good, experienced whole life insurance policy salesperson and get talk to your accountant about that. But indeed, it might be a good way for the company to help pay your insurance when you need it the most. And maybe that policy might be converted at a later date to help you financially as well. Thin ice, make sure you check it out, but lots and lots of folks do that. Be careful with your tax preparers and collectors. When you are going to get your first year's taxes done, don't just put all your receipts in a big paper bag and say, okay, here everything is, because everything an accountant touches, there's a dollar. When that clock is ticking, when they're working on your stuff, those dollar bills are coming out and going on your bill, because they will charge you for every minute they're on the job. That's what they do. That's the way it is. So if you can take your receipts and put them in different line items depending on different categories, like all your fuel receipts, all your rent receipts, all your utility receipts, all your phone bills, all your parts that you bought or other items, categorize them, you add them up. You add them up and do the different adding that you need to do and put a subtotal on it. And what you carry to the accountant is the summary of all that paperwork. And they're only handling one piece of paper, taking the numbers off of it, but it saves hours of work for them and saves you tons of money to do that summarizing yourself. Now, I will assure you that if the accountant needs more information, they will ask you for it, and then you can bring it in. But there's no reason just to set the stage for you having a high bill when you don't really have to. Who's going to get your money? I call them tax collectors. Even though you may be paying money for fees and license and estimates and permits, I don't call them all taxes, just to keep it short. Well, who are the four different folks that take your money? In the towns, it's the clerk's office. In the county, it's the tax office there. They call them the collectors. The state government's NCDOR, Department of Revenue. U.S. government, the IRS, or the U.S. Treasury. That's the people we have to stay in touch with when you have a business. I've given you in your handout information on every entity that's important to you, how to get in touch with these folks and how to stay with them, not how to stay with them, but how to connect to them, information about where they're located. I do want to tell you that we're very fortunate in North Carolina to have a DOR, Department of Revenue, that is small business friendly as much as I think they can be. They welcome interviews with small business folks to help you get set up with your sales and tax use, show you how to do your withholding. They have seminars and classes and a great website that gives you lots of information. So if you're not going to hire a bookkeeper, either virtual or full-time in-house, to do that type of work for you, then you might want to spend some time here.
I can send everyone a link. The Department of Revenue puts seminars on every single month, and we just got an updated link. If you'd like, I can send that to everyone. You can just tell me whether or not it's good, say yes on the chat or not. Like I said, I just got it today.
That's great. I'd like to have a copy of that.
I'll send it to you as well.
Okay, thank you. And I see we've got some chat information there. Brad, will you have a chance to look that over and see if we need to talk about it now, or if it's something we can answer later? I'd appreciate it.
Yeah, Valerie said she wants it, so I'll be sure to send it to her as well.
Yes, yeah, some other folks had written some things up there before, I think. Okay, now on your different, again, your North Carolina tax people, as Brad just mentioned, are very helpful. They have regional offices in the larger cities that you can go to and meet. Usually, if you call them on the telephone, they're very courteous and they will talk to you by name, and you can call back a person individual by name. I cannot say the same thing about working with the federal government folks. Generally, you don't get an answer machine, and generally, you may or may not get an answer. So here's what I'm going to say. If you go to court, you want to have a good lawyer with you. If you end up in a debate with the federal government, with the IRS, you want to have an accountant sitting with you. So I've taken the stance that if I have to have some information from the IRS, I go to my accountant and ask them to explain to them what I need and ask the accountant to secure that. They have direct lines. They understand how to talk with the folks, and they generally will get answers. And they can ask the questions that need to be answered without ever mentioning your name. So that keeps you out of jeopardy, so to speak. And accountants are real good at that, and that's why they get paid. And that's one reason to have a good relationship with them. Also, if you're having your books done by an accountant and you have an audit, they will almost always sit with you during the audit and act, I'm not going to say as your attorney, but pretty close to that as your counselor, and just make things go easier for you. Oftentimes they can represent you without you even being there. So just keep that in mind if it comes around. Lots of different kinds of taxes, but they kind of boil down to withholding tax, privilege license, unemployment insurance type things, employment type taxes, and franchise tax. Plus you got general tax that you will pay based on the amount of profits that you end up with. So these are the four different types. Usually everyone understands what withholding and unemployment insurance is, but what's a privilege license? Well, that's what you get when you go to your local government and you buy a license that gives you the privilege to operate within a certain region. That's a privilege license. The state, the town offices clerks or the city clerks, these licenses, depending on which city that you're in, will range between $50 and $100 usually for small companies. Large companies a little bit more. Small companies just getting started in a lot of counties and cities, there's no charge, but you still have to get a license. You still have to register. A franchise tax means that, yeah, I'm going to buy a Hardee's or McDonald's or a Chick-fil-A and have to pay a franchise tax. Nah, that's not what it is. Every state tax return and every federal U.S. IRS tax returns have a little line down at the bottom on a business return that says franchise tax. And what that tax is you pay $100 to $200 a year just to have the privilege to be able to file a tax returns, whether you make any money or not. Whether you lose any money or not, you're still going to pay that franchise tax as a separate check. And that way you're basically paying, I think, the government to receive and read over your return. But that's what it is. So you don't have a little check to write to the federal government and the state government every year called the franchise tax. County taxes, kind of a different animal. They're different. Your federal and your state taxes are based on your profit, that you made. You make no money other than the franchise tax, you pay no taxes. You make a lot of money, you pay a lot of taxes. But county don't really care how much money you make. The county cares about your assets. Remember we talked about them earlier? The depreciable items, the capital items that you purchase, that's where the county makes their money. They look at a business assets to determine how much money they owe the county. Yeah. So the more assets you have, the more money you're going to owe the county. And your assets for the county are things like vehicles, inventory, but not inventory for sale, tools, real estate, items that you're leasing or renting, and things like that. Hard assets, your computers, your furniture and fixtures, those kind of things. So your county taxes are 100% based on your depreciation sheet in your financial statement. So you need to keep that in mind. I will mention to you that usually the last week in the year, well, sometimes it's the last week in November, the counties will send every business a filing document where you file for your taxes, or list, they call it list your taxes. And you're supposed to turn that listing back in before January 1st. And definitely before before December 1st, December 31st, and definitely before January 31st. Not quite sure which one of those is exact, but I know it's one of them. But the key is, if you're working with an accountant, you don't have your depreciation sheet back, you've just filed your taxes, and it'll probably be April 15th before the accountant gives you your business returns back. And even then, sometimes they get an extension. So you can't file before you have your depreciation sheet. That's the message I'm sending. So at every county, you go to their website, to the tax office, and they'll have a place for a business to ask for an extension. So you do this in December, you ask for an extension till April 15th, and they will grant it to you automatically so that you don't have to meet that listing deadline. If you do not get the extension done and you list later, you're going to pay a 10% penalty. A 10% penalty for filing late. The way to avoid that penalty is to get the extension. It's free and you get it right on the website. Now, there's a lot of radar systems out here, and the auditors, that's the ones that pick us out from everybody else in the whole world to do an audit on. Then we don't want to be on this screen. This is a screen that we want to avoid. It's kind of scary, especially your first time around. It's time consuming and could cost you some money. So Less than 1% of tax returns are audited, so that's a good sign. Smaller businesses are less likely to get audited than larger businesses, my account tell me. But you don't ever know. It's kind of like that highway patrolman that pulled you a few weeks ago out on Interstate 95. You were moving along with the traffic. The traffic was running 85 miles an hour, and you were with everyone else. And they pulled you over, and the really nice highway patrolman came up to you, and he looked over his glasses at you and said, "What's your hurry there?" And you would say, "Well, I'm just going along with everybody else." And why have you pulled me over? And the highway patrolman said, "Because you were going at 85 miles an hour in a 75 mile an hour zone." And you say, "Well, why didn't you pull everybody? Why are you pulling me?" And the patrolman said, "Well, you ever been fishing?" "Of course I have. I go fishing a lot." "So you have been fishing?" I have. "Did you?" And he says, "Did you catch them all?" "No, of course I didn't." He said, "Well, I can't be expected to catch all these people, but I got you." So he writes the ticket. So sometimes we don't know why we get audited. It happens, okay? It's that random type thing happens to you. So let's try to avoid trouble like that. And there's several ways that we can do to keep the flags from coming up. What are the flags that maybe we can use to dodge that? First of all, don't do business with shady tax preparers. If they got a sign out in their yard that's guaranteeing you a refund, if they're guaranteeing you a refund in a hurry, then you need to watch out. You don't want to do business with anyone that seems to be shady or offering you something that seems to be too good to be true, because it probably is. Now, how does that work? People will come in and put these signs out to encourage other folks to come so I can get a refund in a hurry, and they will doctor that income tax return in your name. They'll doctor it up in such a way to create a large refund that'll come right back to you. But the key is that refund's going to come back to them, and they're going to get a big chunk out of it, and you're going to get some too, but it'll be an incentive for you to do it. But they'll end up with some money, and then when the auditors come, you're sitting there having to justify an illegal return, and they're gone. They're in Timbuktu. It happens all the time, so be careful starting to do work with a brand new tax preparer for your personal taxes. You see on the line, you see on the TV all the time, usually late at night around 11:30 to 2 o'clock in the morning, all these people said, "Oh, I was in so much trouble. I owed the IRS $25,000, and somebody got me off the hook for $200, some ridiculous story like that. In my mind, in my opinion, I'm thinking that anyone that is up there that's in that type of situation usually are those are the folks that have dealt with some type of shady tax preparer. Indeed, they ended up in a lot of trouble. Don't know how it happened, but it happened, and now they don't know why. My guess is this is part of the issue. Got to be careful not reporting your income. You're allowed a certain amount of gifts each year, which gives you some room under tax avoidance to claim income that you're getting as a gift or money that you earned or had saved up to a certain amount. You want to be careful with your deposits so you can justify saying to the auditor where that money came from, because they got a right to ask it. You can always say it's money I saved or digged up out of my yard. They probably can't prove that wrong, but you need to be ready to have an answer. But more so in reality, let's say that you're a barber working out of your home barber shop, and you've got 50 people coming in a day, and that's not unreal, and you're charging all of them $20 or more. That's adding up to a lot of cash. Well, there may be a little green car parked down the road actually counting how many people are coming in and out. That's what they do. They send somebody to count how much traffic you have. And then they'll find out what your average charge is. And then when you get to the audit, they're going to say, "Well, how long have you been running that barber shop? Is it a pretty good business?" "Oh, yeah." So, "Well, I've been doing it for about 10 years. Okay. Well, they're going to take that 10 years you just said and use it as a multiplier on the week that they saw. And what you thought was just pennies ends up being hundreds of thousands of dollars that maybe you did or did not report. A lot of business, they have ways of finding out really close to how much money you're bringing in. Unreported income gets people in trouble. So be real careful with that. Not filing on time could or could not be a problem. If you're not filing every year, either not filing or getting an extension every year, that could raise a flag up, depending on the type of business you're in. They're going to say, what's going on here? Well, if you're a business and you have that scenario, just like I just reported, that you've been getting an extension every year, but you do file as soon as they come in on April 15th, then you're probably not going to have any trouble. But if there are other circumstances that look a little fishy and smell a little bad, that auditor radar will probably find you. So keep that in mind. So moving forward now, first of all, Brad and I would like to thank you for hanging with us during this series. We're real proud of you. The Academy of Entrepreneurs and Associates is happy that you've joined our ranks, and hope that what we have shared with you will make a meaningful difference as you move forward with your business journey. Know that I've always said, set your own pace, okay? Do it at your pace, but keep moving forward. I want to remind you, do not do take it or leave it. Create raving fan customers. They will come back to you every year, all the time. They're very important. Have a database and feed it with new names and addresses every day, actually. Pay attention to your mobile web page. Make sure it's powerful and encourages people to call you right now. Don't give them a lot of information that's not going to bring them to you in a hurry. The information you want them to do is to call you right now. Let's talk about it. Take advantage of the Google My Business on the internet. Get that account. It can go a long way. Create landing and selling pages at your website. I didn't mention that earlier to Janae, but that is a subject that we're going to need to have. Where are the page where people will go to actually going to bring that money into you? Make sure you have some testimonials. Learn how to give them. Learn how to get people to give them view. They're very important for you. Add videos to every page. A page that has a video is seen before all the others that do not. And when you're being the best person you can be, you don't have those magic marketing moments that customers will tell you what you're planning on doing next, and to give you feedback on who you can contact, what you need to have in stock, so you'll know what's next down the road. So very important that you learn to make that a part of your business DNA. We'll shift gears now into a different subject. After we finish, be glad for anyone that all of us to stay on board, have a conversation if you'd like to. We'll answer questions or get more information to help you. But I don't want to talk about Sales 101. You're not a freshman. 202, you're not a sophomore. 303, you're certainly not a junior. We don't be 404 because you are an entrepreneur now. You're moving into that world. You don't need to pretend that anyone's going to give you any slack. So I'm going to share with you, as if you've been in business a long time, as I have, some things that I've seen that are proven, because you can have the exact right product at the good price, get a good marketing campaign, and someone is right there ready to buy, and they're kicking the tires or looking over and feeling good. But they say, boy, I kind of like this. I think I need to go on and go somewhere else. Because you can have all the right ingredients in the room or on your web page or in your thinking, but you know what? Nothing happens until a salesman or a sales lady enters the room. Someone needs the skills and the authority and the confidence to make a sale. And that someone needs to be you. We can do all these fancy computer things, and you can have all my systems and gimmicks and strategies and this and that, but nothing is going to take the place of a smile and a good sales presentation and a way to close the deal. So Everything I can say to you in a series of 12 or a 20-hour course all boil down to it's up to you to find those skills and willingness and enjoy closing a sale. So let's talk about that a little bit. We did the A, B, C, D earlier on, always be connecting the dots. But when you move up to senior sales, as you're there now, owner of your own business, it's A, B, C. It's always be closing. Always be closing. Anyone that's ever been to any kind of real estate school or tractor selling school, we all know that we got to keep in our mind as business owners cash flow. But as salespeople, in that magic moment when we're trying to close a deal with a customer, we just have to have our ducks in order, and that means be prepared. What are the fundamentals? People will buy from someone they trust. No trust, no deal. No trust, I don't keep shopping. Take it or leave it, that means no trust. So we have to earn people's trust before we don't ever sell to them. And you may be the most trustworthy person in the whole world, a great Christian and would never do anything wrong. But does that come across to your customer? It's got to. So we may have to practice to make that happen. So let's talk about 5 things that I will guarantee you will have a negative impact, a serious negative impact on your ability to close a sale. Everything else is right, but there's some things that we do, a lot of people do, that automatically keep them from getting a deal. Number 1, is it okay to take a phone call or a text message right in the middle of a conversation with a customer that you're trying to close a sale with, or to earn their trust in a relationship? No. And you and I both know how oftentimes we do it or have people do it to us like it's just, okay, hey, excuse me, this phone's ringing, therefore I need to stop trying to create a relationship with you so I can talk with this spam call that's coming in. Or I got to take this call. Heck no, you don't have to take it. You do just like I did a while ago. Hit that button that says I'm busy now. Leave me a message. Do not ruin a possible relationship or close an opportunity because your phone rings. As a matter of fact, when I go in to talk with a customer about closing a deal or an important relationship, I usually leave my phone in the car, or if I'm in the office like this, I turn it off. I leave mine on here because I get a lot of business calls come in at night, and when I'm talking to y'all, all I got to do is hit that button. It says, leave me a message, and that's what I'm doing when you see me do that from time to time. If you're the kind of person that can't stand around without having a telephone in your face all the time because you might miss something that comes through Facebook, then I suggest you change that habit. Get used to paying prime attention to your customer and less attention to that cell phone. If I'm stepping on toes now, I'm sorry, but I'm not a lot sorry because I'm going to make you some money if you'll pay a little attention. I am certain that my customers love my strong cologne that I wear. And I know that they don't mind that I smoke cigarettes like a freight train and I smell like a cigarette. I can't smell it, but I know they stink. And man, that tobacco, I love to chew tobacco, and well, heck, I spit it right in a cup. That's as clean as it needs to be. Or I've got a stinking bulldog named Otis, and I know he stinks, and therefore he rubs against my legs all the time, so I'm probably bringing stinking bulldog odor into your office. But I know y'all love me enough that all those things don't count. That's BS. In today's world, people like me that have stopped smoking 35 years ago hate cigarette smoke. I don't want to be up close to it or take it secondhand. I start coughing. My voice goes to pieces, and it actually makes me sick. And okay, you're a chain smoker. You love it. You think everybody else ought to love it? Nah. I'll say to you right now, Whether or not you want to save some years on your life and quit smoking, I strongly suggest to you that when you're in business environments around other people that you do or do not know their feelings on that, you get rid of that smoke, you get rid of that cigarette smoke, you get rid of those clothes that stink like cigarettes, and excuse me, otherwise you're probably going to lose a deal because they don't want to see you back. Oh, they're probably going to be very polite. I don't care how good a deal you bring in with you. If you start wearing on the relationship, they're going to look for someone else. Strong colognes make people gag. Know that. And do not bring your pets in someone's office, even if they said it was all right. You don't ever know when your dog's going to take a dump on somebody's floor. You just don't ever know. And you don't know how bad someone else that comes in there thinks that, man, who is this thinks it's okay to bring a pet into my office space? You may be calling on the vice president, and that's who you're talking to, and they're okay with it. They're your buddy. But the president or the owner of the company walks by and sees that going on, and his feelings are totally different. You're not going to get business from them anymore. But some folks, no matter how confident they are or how much charisma we might have, think that I can get by with this stuff because of how cool I am. Nah, you're taking great risk. I know that my political views are right. Everybody in my town thinks that so-and-so is great. I don't care if they lie. I don't care if they cheat. I don't care if they do this or that. He's my man, and I don't stay with him. And everybody in my area thinks that's right. Well, I want to tell you that nobody has all the votes, and you don't know. Even you might guess, or you might take some statement that some customer made to you and assume that they think something. Well, maybe they did the week you heard it, but maybe they've changed their mind. There is no reason that you want to bring politics into your business discussions. Even if your client is trying to bring you into that, you need to be professional enough to guard against it. Because your client may be doing this, but the person they have to go to get approval, and they hear some of these conversations, they may be turning them off and bowling inside because they've learned to keep their politics to themselves, which is the right thing to do. Now, if you've got money to lose or you don't care, that's your choice to make. But it is 100% non-professional and can really cost you some big deals. I know that even here in North Carolina, even here in Dunn and Clinton and Elizabethtown, there are two parties. There are a lot of people who really believe in being the Republican, but there are a lot of people in every community that really believe in being the Democrats. Some you will never know. Some keep it to themselves. Others want to wave flags and make a lot of noise. And indeed, they may get a few more votes in one community than another. But that doesn't mean that person that was the only person in a precinct that voted one way or the other, that may be the customer you're trying to sell to. And you want to make an enemy in a hurry? Then wear the wrong pins, have the wrong flags and bumper stickers on your car, and watch your business go away. Be smart, be proud, be American, be all the good things, but leave your politics out of your business. Just simple advice. Is it okay to walk into an office when someone else is talking on the phone? Even if they invite you to come on in and they're sitting there talking, it's not. And I would suggest to you that you don't want to walk in there. You just say, give me just a minute. I want take your time. Give people the privacy that they need. Even if they're inviting you to come on and enter the space, here's why. You don't want to gamble. You're rolling the dice. You don't want to gamble that something will come up on that telephone conversation that you don't need to hear one side of it, much less both sides. And it happens oftentimes to all of us. So the best way a salesperson can stay out of that whammy is to say, go ahead and finish your conversation. And then when they finish, come on in. The person may at first think he should have came on in. But when they think about it, If they think about it, they will think better of you for giving them their space. And even if you say, I appreciate you mushing me on them, but I like to give people their private space, your stock just goes up with them when you do that. It shows maturity and professionalism. Big mistake. I've been doing business with you and your daddy and your granddaddy for a lot of years, and I know that when I give you a quote, you trust me, and then I'm going to get your order because I've always gotten your order. The very minute that you start thinking that a deal is in the bag because you're cool or because you've always got this customer's order before and you do not have to follow up on it, you do not have to worry about it, urgency has nothing to do with it, you're in trouble. And you've got a seed planted in your thinking that is a bad strategy, and that is taking things for granted. An important deal needs an important follow-up. You don't want to bug the customer, but you want to send the message that I really care and I really want your order. It makes a big difference for me. And man, if we can close this today, I know that you'll rest a lot better, and I will certainly have a better weekend too. Go for the close. Always be closing. Is there an urgency to respond to business information? There is. Today's world is fast and impulsive. The customer may call you or send you an email today, and if you don't answer them by noon, they're getting information from somebody else, and by 5 o'clock, they've sealed the deal, and you decide to call them up in the morning, and you're too late, and you've lost. You want to answer your email in the mornings. You want to check your telephone messages and get back to people. Check text messages. Now, you're inviting people to call you. You're inviting people to send you text. Well, you can't wait 2 or 3 days without checking your text messages or your phone messages. They have to be checked all the time. So remember that. Because while you're waiting, while you're relaxing, while you're doing something else, somebody else is eating your pie. Customers don't wait long. They don't. I believe in this, and I try to answer those messages in a hurry. But every weekend, when messages come in on Sunday or at night, and maybe when I wake up in the first of the morning, I forget to check my text messages and things. Every single week, I'll call someone else back on Monday, and they say, well, Steve, I'm sorry, I had to make a decision. And I talked with someone else, and they gave me what I needed. Sometimes big deals, sometimes not so big, but I need every deal, don't you? Every deal is important to Steve, though. Don't wait. Stay on the ball. Now, this is the gorilla, and we're moving into Sales 404, which is guerrilla territory. The gorilla in the jungle bends the rules. He is the king. He's number one, and he does things. And he has the self-confidence not to worry about it, but it's just kind of built in. That's what he does. That's what I want you to have. I want you to have the self-confidence to manage a situation because you are well prepared. You've done your homework. You know your options. You know your range you're going to work in, like we talked about last week in negotiating. So you feel comfortable with where you are because you're not nervous, because you're prepared. That's the key to having the self-confidence to know that you've been trained. So let's talk about some things that the professional don't do. Never give all your little tidbit information away. Don't tell somebody everything. Just don't do it. And Janae, we talked about some of the items that I mentioned on your website earlier about the way you've done all this great work. I mean, you've done your homework, and that's valuable work that you want to have. But sometimes we don't want to give them all the information. And the reason why, there's two reasons. One is they will pick it apart. They'll try to start putting values here and values there. Well, I don't need that, so let's take a discount there. I don't need this, so let's take a discount here. Or a competitor will be able to take your proposal or your web page, see exactly what you're offering, and they will copy it word for word, copy and paste it, put it in their proposal whether they plan to do it or not, and therefore you don't have anything value added better to offer. So what we want to do is not to give them enough information that they can pick us apart. or find a way to lower our presentation's value, but you want to give them enough information that winds up saying, my goal is for you to be 100% satisfied.
If I could say something real quick, Steve, we did a seminar today on AI, and we actually took AI and looked at someone's website and said, tell the strengths and weaknesses of this website. And it's amazing what someone could do with something as simple as that in like 2 minutes. It took less than 2 minutes, and the stuff was pretty legit. So, yeah, it's really interesting. And that was something that we were thinking about, just taking it and have AI look at yours. You can go to ChatGPT, the 3.5 version, and it'll do it for you. But again, we do have some other AI seminars, but it's just really interesting to have something else look at your stuff, and they have no bias or whatsoever, and they'll say this is good, this is bad. So just a thought.
Well, let me ask you and put you on the spot. Do you agree with what I'm saying?
I definitely agree with what you're saying. That's why I brought it up, because someone else is going to look at your website, or they might be using the AI to look at it. So yeah, that's why I would say use the AI to have your site looked at, so you can look at it. It's like, oh, I didn't think about that being as a weakness. And you might disagree, because it could be, but if you're very specific and put in Bladen County or whatever, it's fairly impressive. I'll put it like that.
I understand. And what led me to this is years of giving quotations for farm equipment, where I would list down every feature that one of my tractors had, and then my competition would say, well, we got that, we got everything Steve's got, and therefore we're just as good. But then when I started taking some of those individual smaller items out and just promising 100% customer satisfaction based on experience and general specifications, then when we came back to debate and closed a deal, I was able to pull out of my sack these little value-added items that I knew I had on my tractors that the other customers had not bought out on theirs. So when you're giving list-specific information, as Brad was saying, then your competitors will probably give less information as well. And then when you use the value-added approach to close the deal, it's going to help you out a lot. You can't do that if you list everything down in your initial proposal. Okay, never ever itemize your quotations. Always give a bottom line, but don't itemize them in the middle. Now, you may have taken the information they emailed to you that they wanted, or the items that they want individual, but when you start listing items down like travel, insurance, service for this or service for that, and we use travel, for example. Let's say you're quoting a customer, let's say you live in Elizabethtown and you're quoting a customer that lives in Wilmington. And you send that proposal to them, and in that proposal, you have itemized time and travel expenses, $500, because you had 5 trips to Wilmington, $100 a piece. That automatically gives that customer a thought process, a seed you planted in saying, well, if I deal with someone from Wilmington, I'll probably save $500. That's right. So you would have been better off to say, my proposal includes all travel and expenses. It's inclusive, and what we're promising you is a very satisfied end here, a happy-ended, so to speak. When you do that, then you can start negotiating, and if there's points that need to be bought out, you can pull them out of your bag. So be careful itemizing. Have everything that you're selling in mind that you are a television commercial. In other words, you are pitching a promotion when you're making a sale. Don't let your guard down. Don't let your enthusiasm down. Keep in mind that customer needs to be motivated, and you're doing it by the way that you're pitching, promoting, putting prestige in this thing, bringing drama into it. You're talking all about it so that the end result is complete satisfaction, so they can have a comfort level with go ahead and giving you the deal. There's nothing else. You're going to look after it for them. There's going to be a comfort level here that you're going to really appreciate. And Janae, that is the final message, I would think, that with someone that's getting ready to buy a big ticket item, like an event, planner will do, especially if they're paying for a lot of the stuff, is I don't really care about the itemized stuff. At the end of the day, I want to be able to go in there and sit down and relax, listen to the music, and just feel very comfortable and enjoy this event. When you can bring across that is the end result, the little items, dollars and cents, don't make that much difference anymore, even though when they started talking, that budget was the main thing. But if you keep pitching the complete satisfaction and comfort level, and they can enjoy this event instead of saying, good God, this thing's costing me too much money, that's when you got that customer ready to close. So you want to be careful not to give away too much information. You don't need to tell them your vendor's name, your subcontractor's names, or whether that's your manufacturer's name. Because in this world of Google, people can go to where you're buying stuff and buy it direct. And there's a whole army of shoppers and buyers out there that do exactly that. And they will call somebody like me up and want to know who makes this and who makes that. And where's this going to come from, Steve? And I know what they're doing, and sometimes I have to answer the questions to them. But when I do send that answer back to them, because I'm not going to lie to them, I don't maybe tell not all the truth there. I'll give them enough information that they can start searching on Google, but maybe I'll spell their name wrong or something so they can't find the website. Don't be a dummy. Give them what they're asking for, but maybe you're asking for some medicine, but you don't want to overdose them here, okay? Just keep that in mind. Never disclose names that you don't have to if you have in mind now that they're going to take that information and undercut you. So many people are doing that, especially with big ticket items. Some people have a hard time saying yes. And it's just not some people, it is a lot of people want to buy something, have planned to buy it, have negotiated a good deal, but when it comes right down to it, they just start wringing their hands in that, I just can't buy this. I've got the money saved and I love having that money in the bank, and I'm just not ready to part with it. Even though I know everything looks good here, I just can't bring myself to say yes. This is huge. And you'll learn it when you are selling big ticket items especially, and people are financing or pulling some big bucks, buying a wedding, buying land, building a garage on, putting a roof on your building. It's hard to say yes when it's something that you just don't have to have, and you got enough money to pay for it, but you hate to turn loose of that money, but you hate to turn loose of that security. Some people hate it so bad they will turn tears into it and walk away from a possible deal, especially on big ticket items. Take my word for it. I've seen it happen many, many times. And I've seen it happen enough to determine that I needed to know what the deal is here, because professionals that get 90% of the good deals closed is only 10% of the people that's selling get 90% of the good deals. They know some stuff that I didn't know. And that's what I've been trying to share with you tonight, because it's the little things, the combination of a lot of little things that make the difference in whether you close that deal or not. Well, here's how you get those people moving. First of all, whatever you put on the table, as we talked about last week, make it a work of art. Put your proposal in such a way that it's easy to understand, it's professional, it shows that you have done your homework in preparation. In other words, you have forecasted what they are looking for, and you've got the answers on the paper in front of them. And Janae, that's why I just don't give you an A+++. In all the work that you put together, your presentation and that webpage is a work of art. I picked it apart thinking there's maybe too much work of art into it and some details need to come out. But the overall thing is you are determined to satisfy that customer, and that's what I want. Now, when they sit down at the table and you're putting an actual proposal into them after you've gone through the process of learning what it actually is, all the little things they want, that document will be a work of art too. I am satisfied seeing your work there. So that was a good example of what I'm talking about. You want it to be that this piece of paper, this proposal, automatically sends the signal that I'm a professional. I'm going to see that you have a satisfactory end to this and will be satisfied with the product that I'm bringing to you. Have you ever heard the fellow, Mr. Mesmer here, F.A. Mesmer? He was around in 1734 through 1815 over in Austria, physician. And his work, his life's work, has a lot to do with what I'm bringing to you right now, because Mr. Mesmer brought us the word mesmerize. And in salesmanship, closing, mesmerizing is a key ingredient for the actor. The actor is you and I. And mesmerize, you may have heard this word before. I relate it to my grandchildren and children sitting in front of the TV watching SpongeBob SquarePants. They'd sit there glued to it. I mean, whatever I'd say, whatever else was going on in the room, their eyes were glued onto that TV with SpongeBob. I mean, it was just unreal. They were mesmerized with that program, and of course, many more. And I'm sure there's been some that I would get glued to. My wife says I do the same thing with a football game. But you know what I'm talking about. That word could mean dazzle, bedazzle, bewitch, spellbound, entrance, hypnotize even, and others. So mesmerize is something I want you to focus on as we talk about this later on as we go now. Because your sales presentation, you've gone through the selling, you've earned their confidence, you've earned their trust. And the conversation goes on, because you didn't say take it or leave it is the reason the conversation goes on. You're negotiating. Things are working right. You're coming to a win-win situation because you didn't say take it or leave it. You kept talking. And what we want to do is to bring the skills to the point that you can bring the drama in now. And the hard work is over. But the real work is just beginning. The hard work about the products or the service, that's history. Now it's about getting that person that's having a hard time saying no to say yes. And you had to watch out for the buying signals, that they gave you signals they were ready to buy so you could stop selling. Stop selling and start closing. So that brings us to this point. When you've seen the buying signals coming in, they've given you the sign that, yeah, I think I'm ready to do it. Then you're in search of what I call the aha moment. And I see this on TV from time to time. And what is that aha moment? Well, those of us who've had children along the way that didn't want to go to bed at night, and we rocked them and took them to car rides at 3 o'clock in the morning so they would go to sleep and did all the things because they were screaming their voice out, just the loudest noise and shrills you ever heard in your life. But after a while, and it might have been hours, after a while, that three-pointed, beautiful mouth would open up and they would breathe deep and they go, aha. That was the aha moment. And we all know that after that moment, almost like a yawn, they close those beautiful eyes and go away to dreamland. What happened? They let the anxieties go. They gave up. Hey, I don't need to be worried about this. I don't need to be frightful. I don't need to keep screaming my voice out. I feel pretty good now. I'm just going to relax and be cool. That's the aha moment, and that is the moment that we are after. That's like when we like the seller. We trust the seller. I know them and I feel good about what I'm getting ready to buy. I know that I'm getting a good price value here. And these people have a good reputation and warranty, and I trust this fellow that's trying to sell it to me. Relax a little bit. Let go of that anxiety that's telling me not to buy it. I just let go of that. And when I get that aha moment down, what I'm going to do is I'm going to lower my voice and show them this document. I might even go silent for a few seconds and say, you know, you're going to look good on that tractor and you deserve it. And I know you've been saving up a long time to buy your daughter a wedding, and this is going to be something special. And you both certainly deserve it. And I just want you to just be able to enjoy it and sit back and relax. So, you know, I'm saying this and I'm shaking my head like this all the time. And there will be a moment when you win that mesmerizing moment and you're shaking your head like this and moving your hand gestures like this, that they will start shaking their head in agreement with you. And in that very moment, you've got a ha. Because when that head shaking starts and you've been doing these hand gestures, it's time for you to point right down to the page and say, let's go ahead and do this business, and just extend that hand right out to them. And they will shake your hand and never have to say yes. Or they will give you a nod. Just say, I know you're having a hard time saying yes, but you're ready, just give me a nod. And they will gladly give you the nod because they wanted to do it the whole time, but they didn't want to say yes. And you were smart enough to know that. And that's how come you got the deal and other people didn't, because you had practiced it and you realized it. And you know, it's just human nature, because when they can breathe easy long enough, they buy. If you move them to the aha moment and get a handshake or an initial, never ask them to speak out and say yes. You can say, give me a little initial right here, just check this block, I'll do it. Or just give me the nod and I'll take care of everything else. Now, of course, right after that's over, you're going to ask for that deposit check, right? But still, getting that nod is the key to closing sales, and it makes a lot of difference. So congratulations, my friend. I congratulate you all. You have finished a long session of training, listening to me and to Brad, and I appreciate it. And I hope that you know now that we will change these lessons almost every time we give them. And we got a new, if you want more, if you want to learn more, dig deeper. On November 1st, we'll start all over with 5 weeks. And matter of fact, we're going to do it again in the spring as well. So know that endurance means keep learning. Learn new tricks, learn new things, stay with it. You're going to get knocked down a lot. You know, people will say no to you more than they say yes, especially when you're getting started. Just know that's going to happen. Steve-O told you that. You get up, you put a smile on your face, and you stay close to being determined to win the race. And how do you win the race in entrepreneurship? How do you win this race? You stay in it. That's right. You stay in it. You keep your journey going on. It's a non-ending circle that we're going to be going around, and we just stay in it to make it work. Have your values, respect every person, maintain high standards, earn trust, foster partnerships, and embrace excellence. You won't go wrong with any of those. You'll be a better person, a better business person. So, and when you're doing that, you're going to let your candlelight shine, give warmth to other folks, and light with other folks. So God bless you all, and God bless your business. Thanks again, and I would appreciate your comments. I know Brad would. We'd like to have some testimonials be emailed in. Now do your homework, send your test in. Now I got a word for you. If you indeed have not completed all your homework to get a certificate, and if you continue and attend the next 5 sessions in the new course, and do that stuff, I'll continue to consider receiving your homework for this. And if it takes you a while to get that other work in, I'll still honor those certificates for you. So I'm in it to win it. I'm in it for you to win it. Thank you so much.
Thanks, Steve. I thank everyone for their attendance, and please feel free. I've sent several emails, so everyone has my email. Please reach out to me if you have any other specific questions and might even relate to another topic. And again, thank y'all for your time. Everyone have a good evening. Are there any questions?
I want to say to Elaine, thank you for joining us, Elaine. Do you have a microphone that you can tell us where you are?
I'm in Bladenboro, in Bladen County.
Bladenboro, that's great. Well, thank you for joining us. Is this your first time you've joined us?
I was on earlier. My first name's Matrisa. I had lost connection and had to come back in.
I understand. Well, thank you so much. And Valerie, good to have you back on board tonight. I hope things are well with you.
Yes, Mr. Carver, thank you. And I'm learning a lot. I had to use these strategies this week and last week, so they're helping me tremendously grow my business, get new clients, and do more paperwork as well. But it's been rewarding.
Fantastic. Well, thank you all. Good to see you. Hope to see you again real soon. And stay in touch, okay? Good night and God bless you.
Good night.
Thanks, Steve.
Let me get out of here now. Chat out. And so where does I get out? I can't get out. How do I get out?